Making sense of trade wars versus traditional trade policy. That's what we're discussing with our chief equity strategist and economist, John Blank, this time around. First of all, John, what is the basic difference between the two for those who don't know? It's important to understand.
Yeah, trade wars, Terry, in this context, this time around, are being motivated by an emergency measures use of a 1977 law that there is an emergency at the national level and you can use tariffs to address it. Trade policy is something that's negotiated and will be negotiated between countries or a number of countries in a trade pact and has passed legislation that kind of creates the framework. So the framework of trade between Canada, Mexico, and China is, the WTO established it, or the NAFTA in the case of Canada and Mexico. Those are trade policies. And what you've seen here is just the interim administration using emergency measures that tack on emergency tariffs around national emergencies kind of as a tactic. It's not a policy.
So, to be clear, we are not yet in a trade war at this point, correct?
Oh, no, we are definitely in a trade war. There has been retaliation measures announced by Mexico, Canada, and China and Europe. And that does mean a trade war. War means when you get a retaliation, and we've seen retaliations. In fact, this morning we got news about a European retaliation on American intellectual property and services. These retaliations are the next round, another tactic, and all of these players, the new Prime Minister of Canada, for example, is an economist, and he is going to seek a new trade deal with the United States. He believes the current one is no longer valid because of the trade war we're in. So this will lead eventually back to what we talked about earlier, which is trade policy, not trade wars.
Okay, and just not getting political here, but according to the so called experts out there, the announced import tariffs are designed to deliver a financial sting right away. You agree with that? And for whom?
Of course, Terry, they cost consumers money because prices go higher. That is, reflected in the caution in the consumer spending numbers we saw this morning and the GDP growth numbers for Q1. So it's certainly stung already the U.S. consumer. Has it, stung in terms of our trade partners? The answer, in particularly in Canada's case, yes. Their Canadian dollar went from about 130 to 144 in the face of this. So that was kind of an adjustment by the Canadian dollar to reflect the tariffs that were put upon the country. Certainly not good news for Canada, but there's other things that happen in Canada other than trading with the United States.
So, the International Emergency Economic Powers Act, is that what you were referring to a moment ago?
Yes, that is the Emergency Economics Power Act from 1977 is what the president has employed to address his emergency tariffing. And of course, Terry, the other thing that can happen is someone can sue the administration under that law and to say it is not an emergency. We haven't seen that yet, but it certainly has happened in a lot of other emergency decisions taken by this administration. The emergency measures by this administration kind of rival those of FDR after he entered office after the Great Depression, which is reflective on what's happening here, which is probably an exaggeration of these emergencies, Terry, that in many cases there is no emergency. Certainly none with Canada, because the fentanyl issue that he's addressing as the emergency with Canada is not relevant to the level that it needs to be.
So, is it the fact that there's a trade war, or is it trade policy uncertainty that the stock market and the economy are struggling with?
Well, trade policy uncertainty, as the Fed measures it, is just the sheer amount of news volume on trade war, trade sanctions, tariffs that come out of the news media. And that uncertainty has now risen swiftly back to the COVID period level when we had all the port shutdowns during the COVID period, if you remember. So to get an idea of how much uncertainty is, it's equivalent to what we saw in the early COVID period with shutdowns of the major ports of the United States and the backup of the freighters into the, pictures of those people parked offshore for miles. So it's all manufactured, Terry. Trade policy has gone nowhere. That is a legislative thing that takes, years to take place. And that is effectively what will happen, I would assume, in a much more long, drawn out process in the next year or two.
So, how do you see all of this affecting corporate profits?
Well, corporate profits right now are record high, Terry, and it's just going to be very hard to see them going higher with this, and it's certainly easy to see them going lower. So, probably taking profits down, particularly for things like the auto industry. GM shares yesterday at the announcement that 25% auto tariffs went down 8.5%, Terry.
What about the global growth impact of all of this? How do you see it?
I've seen numbers in the low threes from the IMF on global growth, which is, a few ticks lower than they'd like to see. But actually, the global economy is stronger than it's been in many, many years. And a lot of PMIs out of Europe and China are well above 50. So there is less concern than you might think. I mean, again, giant pictures of the world out there generally have more domestic drivers of their growth than they do foreign trade drivers. And that needs to be you need to be mindful of the idea that if I look at the overall trade effects on the U.S. economy of Canada, U.S., and Mexico, it's 7% of the U.S. economy in my numbers. So that's 93% of the U.S. story. Doesn't even, it's all domestic, and that other 7% is reflective of what happens out in those other countries, which is not as much as you think.
So, based on recent U.S. economic data that we've seen, are we seeing an economic slowdown here?
Absolutely. There's no question. And the Fed economic summary projections last week reflected that they're down from a 2.8 growth rate of last year to 1.7, 1.8 this year. So we lost a point of growth, Terry, from, I will keep in mind, though, people, it's not 2.8 was over hot. 2.1% is the long-term trend. And, the reflection of the Fed is 1.8, which is 0.3 from the long-term trend. So what I would tell you is we've gone from an over-hot economy to one that is 0.3 off the long-term trend. And that is language of detail and accuracy that should keep you sanguine about this, at least for the moment. That is not, even near a recession when you say 1.8% growth happens in 2025.
That was going to be my next question. So, economic slowdown does not translate to recession yet, correct?
Yeah, Terry, I really caution people on, assuming a recession is coming. It's much more wise to just stay with the quarterly numbers. And, these things don't surprise you, Terry. They're elephants. They're not mice in your backyard that you can't see and you're worried about. This will be easily apprehendable if it arrives, and you've got to have 2 quarters of negative GDP growth to have it happen, not one. And so we won't even know until, August, September, if this is even one, and probably it isn't, and because of the job numbers. And, my earliest warning for a recession in the United States is somewhere out in Q4 of 2025.
All right. As I understand it, we have an early April deadline approaching for tariffs to take effect that haven't already done so. Do you think they're actually going to be imposed?
Well, April the 2nd, Wednesday next week, is the deadline. And yes, I do think they will impose them, but I do think there will be a usual flurry of activity in front of that. Particularly Commerce Secretary Lutnick seems to enjoy that, and people call him up on this and make deals. So, but I don't think that will necessarily take all the tariffs off the table on the Wednesday, April the 2nd. I just think that should not be your base case.
All right, 3 more strong buy stocks that grabbed your attention include Doximity Inc., ARC Resources, and Stifel Financial.
Yeah, these are names you probably don't know as well. Doximity provides a digital platform for medical professionals, physicians, practice areas, and digital tools for medicine. Basically, it enables you to collaborate with your colleagues. They're based in San Francisco. Estimate revisions are up 15% this year and 13% next year. Make actual money, Terry. It makes $1.40 in earnings next year, and the PE though is 46. So I've got a stock price of $60 though after a big pullback, and 70 is our target. So if you're looking for a really interesting digital play in the medical service industry, which is a top 28% area, you got to look into this stock. It's last earnings surprise 36%, last 4 surprises 26%. So let it pull back. It's pulling back right now. It could go a long ways down. It was back in the 30s in middle last year. We're at 60 some now. So keep it on your radar screen more than anything, Terry.
All right, ARC Resources.
ARC Resources. So this AETUF, probably don't know this one. They are engaged in exploration, acquisition, and development of oil and natural gas properties in Western Canada. Yes, I said Canada. So this is a top 9%, but it's an E&P in Canada making $250 a share in earnings with only an 8 PE ratio because it's all caught up in the U.S. Trade situation. However, if you want to bet on all the bad news is priced in on a stock, this might be your play. At a $20 share price, we've got a 1, for a strong buy, and we got a B for value. You can be contrarian here and probably do quite well with ARC Resources, so take a look at it.
And Stifel Financial.
Stifel Financial, ticker SF. It's the number one pick, and I've got a target price of 112 with the stock trading at 97 after a pullback. Still looks a little rich to me on the chart. I'd probably just keep an eye on this one, but you get $9.40 in earning next year. Super strong place for that stock, and the PE ratio is only 12, which is not high. What you get out of here is basically a bigger point of view that financial investments are a top 12% area of the U.S. economy right now, and they're a player in that area. So if you're looking for something, this is a holding company of many financial services, but you always got to wonder if, given the outlook for the markets that, you get in on some of the wall of worry here and buy a stock like this and ride it back up.
All right, our chief equity strategist and economist, John Blank, on trade war versus trade policy. With John, I'm Terry Ruffalo. Here's a question for you. Why are insiders buying company stock with their own cash? Can only be one reason. They expect a price jump. Zacks is revealing the best of these buys, making them available to you for a limited time. So go to Zacks.com/promo for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.